My name is Justyn Allen. I'm a certified financial technical analyst, also a portfolio manager. At the end of 2020, I would have been trading for 10 years. In that 10 years, I gained a lot of experience using technical analysis. With that experience, I was able to develop trading strategies. The trading strategies that I develop are able to perform throughout all markets, so uptrends, downtrends, sideways trends, or pandemics. Being a portfolio manager means that I use my trading strategies, make profit consistently over a period of time, making sure that I manage risk, and I also do that for other people as well, whilst managing their accounts, managing funds, companies, high net worths. I take a systematic approach to trading. So what that means is I basically trade like a robot. For example, in my set of rules, more my trading strategy, 10 things need to happen. If only 9 of those things happen, then I'm out into the market, or 10 things need to happen. The benefit of that is I can keep absolute consistency, because overall with any strategy there are losses involved, but the key is to stay consistent so that you can ride out the losses as well as capture the profits. What a lot of people do is they have a strategy and they experience the losses, then they feel that they need to make some changes. When they make the changes, there's no way of being consistent, so you're just all over the place. Then it also affects your mind state, which is when trading psychology gets involved. So what I'd advise people to do is to develop their strategy. Once you've got your strategy, stay consistent with it. Also, when you do have your strategy, you can then test it and test its overall performance. That's where back testing comes in. When you've back tested your trading strategy on a specific financial instrument, you can then get the data and see your success rate. With your success rate, you can then see, the amount of times you make a profit or the amount of times you make a loss. Then with that data, you can then allocate the correct risk per trade, because as a rule, generally people believe that you can take 2% risk per trade. Whereas if you did the correct back testing with your strategy, you then find that instead of taking 2% risk to stay within your maximum drawdown, you should actually only take 0.5% risk. Or if you're a less frequent trader and you find that your success rate is fairly high and you're happy to take the risk, you could essentially go for even higher than 2% and maybe go for something like 4 or 5% risk. But it's totally dependent on the data that you've got to help you determine that. Never guesswork, it's always based on data. It's 100% possible. I can prove that with my verified track record as well as my detailed statements of trades. So again, technical analysis is the use of past market data to help predict the future direction of the market. As a trader, your job is to predict if the market's going to go up or if it's going to go down. If you say that the market's going to go up and it goes up, you make a profit. If you say that it's going to go down and it goes down, then you make a loss. Then you make a profit. But if you say that the market's going to go up and it goes down, you make a loss, and the opposite. So with the use of your trading strategy, what you're actually able to do is to find common patterns that happen over time, consistently over a period of time, over a length of time, and with that you can then backtest your performance to see how you would have performed in previous years using that same strategy. And then it's a case of literally waiting for the market to play out the same sort of characteristics so that you can get some opportunities basically. So with a strategy, you follow a clear set of rules. The market does this, this and this, then you enter the market for a buy or sell position, whichever your strategy states, in order to make a profit. But again, you're never 100% right. You can, even if you're 90% certain that you'll make a profit based on your strategy, which is a very high success rate with your strategy, what you'll find that 10%, you could still end up losing a lot of money. So again, the thing that you need to do is make sure that you manage your risk so that if you do take a loss, then it will only be like a little hit rather than a big knockout. So there's a few people that I look up to when it comes to trading. The first is Paul Tudor Jones. He had a documentary called Trader, and he was just big on managing risk. So how I saw it is, if he's a billionaire and he's in a profession and a line of work that I'd like to do, then and he's talking about the importance of managing risk, then that's something that I should look at. So when he mentioned that, I made sure that I studied risk a lot more and had a lot deeper of understanding of risk management. Um, I saw that he also does like philanthropy work. I like that. So he was a good person. That's my working now. But yeah, no trade. Another person that I looked up to, or still look up to now, in my industry is Ray Dalio. So Ray Dalio, again, he's a billionaire. I like his story because, he started off successful. Then he lost it all. He had to borrow money, and then he built it up brick by brick, and now he's a billionaire. So that sort of person with the tough resilience, that's definitely someone to look up to, and his approaches to trading. So one thing that he mentioned is that people shouldn't necessarily always trade like robots. They should have a level of discretionary, because a person's the one that developed the robot. So sometimes a person can outthink the robot. So that means that sometimes you need to bypass your strategy. That's only something that you can do based on your experience and your level of skill. So that's gathered over time. But yeah, those. Oh, and also Jim Simons. He's another billionaire. He's got a hedge fund, and he's the one that takes a systematic approach. More of like his fund's based on algorithms, but he's a big player and someone that I'd like to meet. I'd like to meet all three of them one day. But those are the three people that I look up to. So you got Paul Tudor Jones, he's a great man. Ray Dalio, another one, and Jim Simons. So I currently work with some high net worth individuals, as well as a fund in America. I'm also talking to some funds one fund in Canada who has a connection to another fund in Dubai. So that's who I'm currently working with, just looking to expand and take it to the next level, so I can eventually be on a par with like Ray Dalio, Paul Tudor Jones, and Jim Simons. That's essentially a big thing from where I'm coming from. But I just know that it takes the hard work, developing the right relationships, having solid foundations. One of my friends in Germany, he told me, he basically said that you can be good at your trading, but to get it to the next level, there's other things in play. So he's helped me a lot in that sense, and because he's very well clued up in this industry, what he says I take on board and I apply it. So thanks a lot for that. I'd like to work with high net worth individuals, companies, hedge funds, anyone that would like me to manage their trading account basically. I make sure that I stay within my risk parameters. We discuss the risk parameters initially. I can show my performance and show my approach to trading, make sure that everyone has a good understanding of that. But yeah, generally I'd like to work with high net worth individuals, hedge funds and companies that would like me to trade their accounts. See, look at the smile on my face. Generally, because I'm talking about trading, it's a serious thing. Like, for example, if you went to the doctors and the doctor just kept smiling at you, or your surgeon, if he kept smiling at you when he's about to cut you open, how serious would you take him? But again, if you met me in person, or whoever has met me, again, all my friends or whoever I work with, they will tell you that I do smile. Just when I'm explaining something, I don't know what I'm smiling for, but yeah, I do smile. Can anybody be a doctor, or can everybody be the heavyweight champion of the world? Yes, they can. But in reality, you need to make sure that you put the work in. You're willing to take the losses. You're willing to take the sleepless nights, go through the learning curve. Make sure that you're getting the right information. You're applying yourself. But yeah, anyone can be a trader. But it's not a thing where I'd portray the image that the man down the road that's only putting in like 1 hour a day can be a profitable trader consistently. That's a lie, because I didn't work so hard for 10 years to be able to do what I do now, to literally say that someone can learn how to trade in the space of 5 minutes. Trading seems to be what I find. Trading seems to be the only profession nowadays where someone believes that they can be a consistent trader in like a fraction of the time. Whereas if you decided today that you'd like to be, I don't know, a doctor or the heavyweight champion of the world, you couldn't do that in a short period of time. But people are actually forgetting how difficult trading is, because it's not just having a strategy. You know, you do need to have your mind state. You need to have the correct mind state, your correct psychology. You need to be able to sort of like detach yourself from the value of money, so that you can pull the trigger and take trades. That all that process and developing the strategy, having the correct mind state, the psychology, knowing the profits and loss ratio, all that sort of stuff. That does take time, and you have to go through a process to get to the level where you are consistent. That doesn't take a week, but if you are willing to apply yourself, anyone can do, because again, anyone can do whatever they want to do. Just make sure that you apply yourself. So in any learning curve, people take losses in anything in life. Same goes for trading. In the earlier years, I have had some big losses. The big losses taught me some lessons, which is what I live by now, why I take my systematic approach. But generally now, I don't take big losses, no. Everything's calculated, and stay within my risk parameters so that I don't have to have any walks in the park or feel like the world's over. Now everything's just calculated. Don't take too much risk, because previously, and what a lot of people do now, is they focus on the amount of money that they can make, or they say, oh, there's no way that that trade won't go against me. There's no way I'll lose money. But in reality, no one knows. So even though I have a high success rate of not losing money, you know, what I do is I protect myself by making sure that I allocate the correct amount of risk per trade, as well as keeping my trade frequency within my strategy. So yeah. But again, I don't take any big losses anymore. I make sure that everything is strategic and stay well within my risk parameters, so that if I do take a loss, it's like a little jab rather than a knockout. So if you take too much risk, a loss will be like a knockout rather than a little jab. So make sure you take little jabs. The reason I focus on risk so much is because, again, a lot of people focus on the pie in the sky ideas of how much profit they're going to make or what they're going to buy, when in reality, you should always look at the amount of capital that you're risking, because at any time the market could turn and you could lose. No one is 100% certain what the market's ever going to do. Again, you have a good indication what the market's going to do, but again, you know, the market could go against you and could be catastrophic if you take too much risk. So the reason I focus on risk so much is because, one, like anybody, I don't like taking losses, and I've taken losses that hurt. So after that, you should learn from your loss and make sure that you are staying very strict in regards to your risk management. And also, when you have got your strategy, profits do come. So all you need to do is literally wait for the opportunity to come. Don't force it. Take the trade. Don't focus on how much profit you can make. Just follow your system, stay within your risk parameters, and you'll get the job done. No, I don't teach people how to trade. I have done in the past, probably around about 5 people. But I found, those people that I did teach, they do have a good understanding of trading. Some of them are profitable. But generally, what I found is that when I did teach, it took away from my main work and my main trading, and I didn't like it. So my main work is trading, managing accounts. The reason I make videos and show people how to trade online is so that, one, people can get some proper learning, no charge, so that you can have a clear understanding of what you're doing. Another reason is because I've got another friend in the UK. He said to me, if you take this analogy, you'll be able to get a bit further. So he said, if you were in a jungle, like the Amazon rainforest, and there's a rescue helicopter above you, how would you be seen? You'd obviously have to, make a fire, get the smoke so that they can see you. So by me doing these videos, it's a way for me to showcase my professionalism, show that I actually know what I'm doing, and just be here and have an online presence. So now that you know a bit more about me and what I do, if you got any questions, just send me a message or send me an email. If you'd like me to cover anything in my video tutorials, send that in the email. Or if you'd like me to manage your trading account, send me an email or just give me a contact and I can go through my trades and everything that I do. Yeah, so hopefully I'll have some more videos coming out. Well, I will have some more videos coming out. If you stay tuned, you can take them in, make some notes. You'll be able to have a lot more knowledge on trading that you do now. That's for a fact. And again, all of my videos and my teachings are coming from a person that's actively been in your position. So I've been the rookie, I've been the beginner, trying to figure it out. So I didn't mention it, but for me, the reason why I've excelled at trading is because I gave myself no other option. I didn't have anything else to fall back on. I didn't make a plan B. This is my only plan. I'm not doing anything else. I'm not teaching. I'm only trading. So that with that mindset and that approach, the only option is to, for me anyway, was to carry on going. So that means I've gone through and I've developed all the strategies that work, that don't work. I'm able to identify them. So I don't. So anything. So what I'm saying, sorry, is anything that I show is based on experience. So knowing what methods work and what methods don't work. If I don't show them, I just haven't found any use for them. You may find some use for them. Don't get me wrong, you may find some use for them, but this is based on my experience and what I've been through and the amount of work that I've put in. When it comes to trading, I don't take any shortcuts. I do all the work involved. If you ask anyone about me that knows me, they'll tell you that I'm always working. Like initially, when I was learning to trade, I worked 19 hours a day, and it's not a lie. I really did work so much. So if you feel like you've got any questions for me regarding technical analysis, any of the technical tools, just send me a message and we can talk about it, and I can help you out. Or I can help you out, but what I'll generally do is I'll make a video about it so other people can benefit from it, because I don't want to go down the route of just, being a teacher. I just want to trade. So again, all of my teachings and all that sort of stuff that I have on videos is based on experience. So seeing what works and what doesn't work. A lot of people that I see, or a lot of videos that I see, I don't see them, when I glance over them, they're based, or they're told by people that I know don't actively trade. And if they did trade, then they would know that method has its flaws, so they wouldn't tell someone else to do that. But yeah, just watch my videos and contact me. So again, contact me if you'd like me to cover anything in specific in regards to trading, or if you'd like me to manage your trading account.